Good morning, everybody, and welcome back to Wise Tech for Wise Money, the podcast where we speak to founders, operators, and market leaders about how strategy, experience come together to build stronger, more scalable businesses. I'm Gary Wayne, founder of A1 Solutions. We work with founders and leadership teams and property and financial businesses to improve efficiency, scale intelligently, and grow through smarter systems, better strategy, and practical AI-driven automation. Today's episode is titled Beyond Mortgages, Building Ethical Rent-to-Own Systems in a Credit-Constrained Property Market. Today we're looking at a part of a property market that sits slightly outside the mainstream, but arguably very important and solves one of the biggest problems globally: access to home ownership. I'm joined by an expert in that field, Kyle Barth, founder of KD Properties, based in Saskatchewan, Canada.
There you go.
Real estate investor specialising in multifamily and, more importantly, recognised expert in rent-to-own structures, helping people move from being locked out of the market into actual ownership. Kyle also sits on a national board focused on ethical standards in rent-to-own. So this isn't just about deals, this is about how the model is built and governed properly. That was a long introduction, Carl, but I'm pleased to have you here.
I appreciate it, Gary. Thank you for having me.
So let's start with your journey, Carl. I'm interested to know, you look very young, so I'm very interested to know how you got to be such a wise head on such young shoulders so quickly, and how you arrived at this destination.
Yeah, absolutely. My real estate investing journey started about a decade ago, and it started small and humbly. I was working as a civil engineer at the time, and I decided it was time to look at something else, something where I could control my own future and not just be working for a large corporation. There's nothing wrong with that, but I had a motivation to do something else for myself. And like I said, it started small, doing some flips and burrs on some duplexes and smaller projects. And then I quickly jumped into multifamily, as you had mentioned. So I've built a multifamily portfolio, and that's something I still focus on today. But the big thing for me is rent to own. And that started for me in 2019. And in fact, there's a little story behind it. I was doing a flip, and the conditions weren't great. So we bought a great house. We started doing our demolition, and lo and behold, we found some things that were unforeseen. So our scope went up, our schedule went up, and then all of a sudden we were trying to sell the house at Christmas time, which is not a good time to sell. So we were faced with a decision: sell at a little bit of a loss. We probably would have lost about $5,000 on the project. Chalk it up to lessons learned. You're not going to win every single one, but I looked at alternative exit strategies. And the fact is, it wouldn't have cash flowed monthly if it was just a rental based on the current market rental rate for that property. So I came across rent-to-own, and I started to research, and I found a mentor, and I showed the property to him, and he said, "This is a fantastic property for a rent-to-own." And that was the first one. I put it up on Kijiji and Facebook Marketplace, and I had over 200 responses within the first week. I was blown away at the response that we got, and we were able to put an incredible young family that couldn't qualify for mortgage on their own at that time. We placed them in the property, and yeah, ultimately 4 years later, they became homeowners, and we turned that project, which would have been a loss, into over a $40,000 profit.
That's amazing. Can I ask you a question?
Absolutely.
At what point do you fix the end price? So, the young couple moved in, they rented it. Say today it was worth $1 million, just for example. But you don't know when you're going to sell it. They might be able to buy it in 3 or 4 years' time. Do you give them an option to say, look, In 4 years' time, subject to getting the mortgage, you can buy at this price, or do they have to wait and see what the market is in 4 years' time?
No, we fix the price at the beginning. So when our clients look at the contracts, the price is stipulated right in there. So there's what I'd call a today price, and then we apply an annual appreciation factor. So in my current market, we're using 3% annually. We haven't changed that for a long time. It's a little bit conservative. Our market is incredibly hot right now where I live. In fact, we did a 7% year over year increase recently. But I use 3% because, like I said, it's conservative. People know exactly what their price will be at the end of the term, and it is a fixed term. Typically, it's between 2 and 4 years. So if somebody needs 3 years, they know exactly what they'll be paying at the end of 3 years.
Fantastic. So this was the start of your rent to own journey. And at that point, at what point did you decide to make it mainstream?
Well, not too long after, we certainly identified the what I'll call the power of rent own, and also it truly creates win-win-win deals. So it's a powerful investing model, and we can go into why. There's many reasons that I like this over just a typical long-term buy and hold for single family. I consider this to be more secure, higher cash flowing. You deal typically with better tenants because they want to own the property in the end. They're responsible for repairs and maintenance, less property management and oversight on them because again they're looking to own the property, among many other reasons. So rent own is incredibly powerful in that way. There's also a stipulated price at the end, so essentially your profits are outlined at the beginning, aside from some risk factors. So for those reasons, it's a very powerful investing model, and that's why we quickly decided that was a route that we wanted to go. And then the other thing I said, it creates win-win-win deals. The main reason that I continue to do rent own is it's truly helping people. We get to help people get into homeownership. Excuse me. We get to help people get into homeownership. We work with private capital investors as well, and we provide really great returns to our investors. And then it helps our communities.
So give me an overview. Obviously, you're not, I mean, you might be rich, but you're not rich enough to buy every house you need. So firstly, you identify property, you pull in investors to help you buy it, and then you look for people that can't afford houses, can't get a mortgage to rent it out to our future price.
Sorry, one moment, Gary.
That's all right.
1 sec.
Please don't die on me. We'll edit this, don't worry.
Yeah.
Shall I repeat that?
Sorry about that.
That's okay. Shall I repeat that?
Yeah, please. I
Yeah,
apologize.
so tell me, obviously you're not rich enough to buy every property you want, or maybe you are, but am I right in thinking that you find investors for the property that you found, you obviously buy that property using investment money, you then obviously rent it out to a family or people that want a mortgage but can't quite get one at the moment with a future value. And then, when it's sold to the people that get the mortgage eventually, you then share out the dividends to everybody who invested.
Yeah, that's essentially it. We have a relationship with a local credit union who really likes the business model, again, because it's helping people. So we have access to mortgages to purchase these properties. And then they provide about 80% loan to value, the remainder of which is with private capital investors.
Fantastic. So, why? Tell me, why can't these people get mortgages? Is it because salaries are too low, or criteria is too high, or their credit ratings too weak? What's the real problem?
Yeah, certainly there's many reasons that somebody might be declined a mortgage right now, but by and large, it's two categories. The first would be a lack of down payment. They simply have not been able to save enough down payment for whatever reason life has thrown at them. And the other reason is credit. They don't have a high enough credit score, or they have bruised credit. Subcategories to that would include people that are going through a separation or a divorce, and they're looking for stability for their family, but they can't enter into a new purchase yet. So this is again, I often call it a bridge. This is a bridge until they're ready to qualify and purchase on their own. We've also helped many newcomers, people that are new to our country, until they have what's called their permanent residency status. Often they're not able to get a mortgage. And yeah, so it's just harder today to qualify than ever before, really.
So let me ask you a technical question. Now, I can't get a mortgage in a minute, but I want this house you've got. We agree that it's worth $1,000,000, but for me to buy in 3 years' time, it's going to be, 1.2, just for example. I'm in the place for a year, maybe 2 years, 2.5 years, and the property goes up 10, 15%, just example. But I still haven't got quite enough mortgage money for my deposit. However, the property's appreciated. If we value the property for mortgage purposes, only improved value, and I'm only paying X, Y, Z for it, which might imply there's already equity in it, can you use that equity to offset the deposit you need?
Typically no. And the reason is because your lender, when you go for your mortgage at the end, they're going to give you in Canada up to 95% loan to value of the lower of the purchase price or the value of the property, like at an appraised value. So with a purchase price at, again, in the example you gave, 1.2 million, they're going to give you 95% of that. So you still would need to save that 5%, even if it's worth 1.5 million. Now, I suppose we could enter into a new contract with a new purchase price, which would allow you to potentially access some of that equity, but that's changing the price. So that's typically not something that we would look at.
Okay. All right, I just wondered because it's the sort of thing that has gone on in the UK.
Okay.
So, what else? I mean, this, how how widely spread is this across Canada? Is this something many people do, or is it something very special to what you do?
There are other rent-to-own operators in the country. I'd say, in the hundreds, not thousands for sure. It is quite niche. The way in which I've structured mine is there are some differentiators, certainly to the competitors. So, for instance, more so on the investor side. So, essentially, it's operating as what I call a mini fund, where a pool of investors would enter in together. Once we have a certain level of capital, that will allow us to deploy that capital to create a certain number of rent-owned properties. Let's call it somewhere between 8 and 12. So there's a bit of diversification for those particular investors, where again their investment is spread over multiple projects rather than just one. A lot of other operators would have a one-to-one relationship with a single investor buys a single house. If things go well, great. If things don't go well, that investor unfortunately experiences the hardship alongside them. But yeah, certainly in the model that I've created, there's diversification. We also have educational and support components that we've spent a lot of time developing for our clients to improve their success rate. So those are a couple of the differentiators that we've set up.
And the educational side, is that just part of a program, or is that a separate service?
Part of the program. It's the way that I say it is my client's success is our success. So when they convert to a homeowner, that's when we experience the largest profits. That's when we experience the largest success for the business. So our educational and support components include financial literacy training, credit counseling, rapid credit rebuilding, where we report their rental payments to the credit bureau to help their credit increase. We do quarterly visits to the property, which we call Homeownership 101, to help them understand how to properly maintain and operate a household. We obviously help them find the right sized house for their family and for their budget, because we have a realtor on our team and we have a mortgage broker on our team, so we help them procure the mortgage. It's essentially wraparound services to help somebody get into homeownership where they, again, don't qualify today.
Is this a local service, or do you work nationally?
As of right now, this is local. There's future aspirations to expand to other regions, but right now this is local to Saskatchewan.
How big is the problem of housing in Canada and people that can't get on the mortgage ladder and are desperately trying to and looking for alternative options like this?
Yeah, it's a massive problem. And I think it's a lot bigger than people think or people actually see. And it goes across the entire country of Canada. We have a massive shortage of housing supply, and obviously demand is not going down at all. We have immigration still coming into the country, population is increasing, and there's a big need for housing. Nationally, the federal government has made some programs where there's a lot more rental properties that have been built, purpose-built rental properties, apartment buildings, townhomes, and things of that nature. However, there's little that is helping on the home ownership side.
So let's go back to the actual scheme, because it interests me. They move in as a rental. They're going to buy it in 4 years' time or 3 years' time. I presume, obviously, the contract period for when they buy it is obviously different with every couple or with every family. Who's responsible for the upkeep of the property during the rental period?
Our clients are responsible for repairs and maintenance up to a stipulated amount in the contract. If there's something larger that was to go wrong with the property, our company would cover that, but then it gets added to their final purchase price. I'll use an example of a furnace. If a furnace was to go, that's approximately $4,000. Our company would cover that. It gets added to their price at the end, because essentially they're now the beneficiary of a brand new furnace.
And so insurance and everything of the buildings, is that covered by them?
We, as the owner of the property during the rent-own period, we're responsible for typical homeowner ownership costs. So that includes, mortgage, carrying costs, property taxes, insurance, fire insurance, building insurance. However, they are responsible for utilities, as well as they have to have content insurance to cover off anything of their own if there was to be any type of loss.
And if they want to decorate it, they can do so?
Yeah, we want it to feel like home. They get to choose the home, and that's something we haven't talked about yet. We pre-qualify them first, and assuming everything looks good on paper, we do interviews. They like our program and they're a good fit for us. We send them out to pick the house of their choosing on the open market. So once they've chosen it and we're able to purchase it, they move in. They're allowed to do renovations on an approved basis. So it has to add value to the property. If somebody wants to do pink and black zebra stripe paint in a room, we're probably not going to allow that. But anything that's tasteful and improves the property's value, we're certainly going to allow it. And like we said, we want it to feel like home right from the beginning, all the way until the time at which they're able to buy it.
So you're not buying stock and then looking for a renter. You're actually saying to the renter or potential buyer, what house do you want that's on the market? Find it, and then we'll try and buy it for you.
That's correct. Yes.
Oh, that's amazing.
Yeah, they have choice.
Service.
Yeah, they have choice in the matter. We've had some in the past where it is an inventory, where we market inventory to people as rent-own. But this program in rent-to-own terms, it's typically called tenant buyer first. Our clients are tenant buyers. They're a tenant during the rent-own period. They become a buyer at the end. Tenant buyer first means you find them first, you find the property after.
I think that's amazing. So tell me, where do deals typically fail? Is there ever a situation where the client moves in, rents, come the 3-year contract's up, and they can't get the mortgage still?
Yeah, it certainly happened. The educational and support services that we have improved our success rate, our conversion rate to our clients converting to homeowners. But there are instances where they're unable to complete on time. Um, just like lenders and financial institutions, there are foreclosures on mortgages, even if their underwriting never could have foreseen it. So there are life circumstances and life events that happen that sometimes put people in a difficult position. So, and in fact, we've had people leave the program because they found opportunity elsewhere. We had somebody recently leave because they had a job opportunity in another city that they absolutely could not turn down. And if they were to have been homeowners, they would have had to obviously get that house ready for sale, sell the property, face realtor fees and any fee to dispose of that property. But when they exit our program, they essentially are able to just walk away. There are some financial repercussions, right? They have saved some down payment with us, which they don't get back. That's forfeited if they choose to exit the program. But yeah, it's they're vested financially and they're vested emotionally because they were able to pick the home. So people typically don't walk away.
So there is a risk for you in that, you got people in, they're going to buy the house in 3 or 4 years' time. 18 months goes by. For some reason or other, they now don't want to live there or buy it. They need to move away or whatever reason. There could be a situation where your property is going to be void of rent.
Potentially. We have a lot of risk mitigation factors built in. Like I said, I was an engineer previously. So as an engineer, you're taught to identify and evaluate risk a lot. So I looked at all the risks and I've developed a risk matrix that covers most things off. So that's a perfect example. If somebody was to leave the program, what factors do we have to mitigate that risk? Well, first off, my prospective clients need a minimum of $10,000 to start in our program. Again, we're going to buy a house for them. This isn't a small endeavor, and they have to have some skin in the game and understand that this is a serious undertaking. So it's a minimum $10,000 to start. So that's added security from a business perspective, from an investment perspective. Likewise, they pay a monthly rental rate, which we cash flow off the monthly rental rate above our expenses. But then they also pay what we call the credit fund. So that's a monthly contribution that they make towards their full down payment. So that allows us to cash flow more than a typical single family residential rental property. These accumulate to their full down payment if they're able to execute at the end. However, if they don't, again, it's the contracts essentially become null and void, and they forfeit those funds. So, and then the last thing would be we buy properties that are marketable. If somebody was to leave the program, we would then look at alternative exit strategies, and typically we would look to find a new tenant buyer that would be interested in that property, and we would typically have them in within a month or two. And with the other funds that I had mentioned that our previous client had paid, we typically can cover off things like a month or two of vacancy, minor repairs or painting to get it ready for a new client to move in.
Great. I mean, I've heard about this in a few different countries, and rent to own can sometimes get a mixed reputation. Why is that? What's the biggest misconceptions about this model?
Misinformation. That's a big part of it. There's many reasons that it certainly has a sullied reputation. There were a lot of misguided or even predatory predatory operators in the past. People that may have owned a property and said, "Hey, you've been living here for 5 years. Do you want to own it?" And their tenant says, "Yeah, sure." And that owner might just say, "Okay, well, you've been paying me 1,000 a month. Pay me 1,500 a month for 10 years, and you own it outright." And then at year 7, they just sell it, right? That's very predatory, and so often misinformation, lack of contracts. Yeah, these are some of the main reasons. A lot of people also think that clients will never qualify. People that aren't able to qualify today, they're not qualifying for a reason, and they're not going to qualify ever. But we've really changed the game on that, right? Again, with the educational and support services, that's where we're able to take people from whatever is holding them back in life and make real meaningful change for them so that they can qualify for a mortgage in a foreseeable term. And we provide a personalized plan that outlines what they need to do to get to that qualifiable position. Also, this is a business. We have systems in place. We have contracts that have been through, hundreds of lawyers that have been vetted, that protect all parties that are involved. So yeah, these are the reasons that I advocate for rent-own as a real means for people to gain a home ownership that can't do it in the traditional sense.
From your position on the national board, what are you trying to standardise? Is there any laws in the making that regulate this type of business?
We would have to follow some of the national laws that would be out there in terms of just lending and how somebody could obtain a mortgage in the end. But rent to own is not governed. So that is why we created, and I'm on the board for the national organization. It's called CARUP, the Canadian Association of Rent-Own Professionals. And essentially we exist to advocate for the ethical practice of rent-to-own. We have many members, and so we have a membership. We provide education and support to them as well, where we're showing them the proper way to facilitate rent-owns.
As a business, do you see it as a very scalable business? Do you think you could franchise this model?
Yes, absolutely. It's very scalable, and the reason that I say that is the demand is massive. My bottleneck has not been clients, to say the least. The difficulty is every project requires the purchase of a house, so it is capital intensive. But with the right structuring and the right partnerships, this is an incredibly scalable model. It's very profitable. I've shown some of the ways that this can profit. So it's very scalable, and it certainly is a franchisable model, and that's something that we're looking at for the future.
What makes how do you go about finding investors?
Yeah, we market. So our investors have found us either through social media marketing, word of mouth, and things of that nature. That's primarily how we've found our investors thus far. Yeah.
You said obviously tenants have to have, or renters have to have 10,000 deposit. What other checks do you do? What other due diligence do you do to ensure you find yourself a good potential buyer as opposed to someone that could let you down in the future?
Yeah, good question. I like to say that we do more due diligence than the financial institutions, and we do more due diligence than typical landlords because we do them together. We are pre-qualifying our clients the same way that the lenders would for a mortgage. However, we're looking at the long-term picture. Most lenders, they need to check the boxes today. And if a particular prospective client for them doesn't check a single box, it's typically a no, come back when you're ready. Whereas we're able to provide a personalized plan of how do we make them check that box in the future. So we qualify them on the same debt servicing ratios as the lenders because they're going to have to qualify in the end anyway. But then we also qualify them as landlord because they will be our tenant for the rent home period. So we do background checks, credit checks, income verification, the job checks. So we're doing kind of from both sides of it. We're checking them out and thoroughly doing our due diligence on every prospective client.
What happens if we get a property crash? The property's worth $1 million, contracted to rent it for 3 years and buy it, offer you 1.2 in 3 years' time. But hold on, Donald Trump's caused a recession. The market, bashes out, and all of a sudden everything's off for 10, 15%. I'm contracted to buy 1.2, but I'm not going to get a mortgage now because it's only worth 900. Just, what happens? What happens to you and what happens to them?
Yeah. I mean, I would like to say that we could cover the risk of every single situation. That is one that we have looked at in depth. Um, that's a difficult thing. Our typical response for that would be let's extend terms. So, with the example that you just gave, maybe we need to extend by another couple of years to allow the market to regain or to rebound from whatever world or economic event has happened. That's a difficult situation for everyone. And really, if we're faced with that situation, it's a much larger problem than just a singular deal or a singular rent zone. That's more of a regional or even national type event. But I will say one of the things that we do to mitigate that is we're very diligent on the markets that we enter. So I invest locally for a couple reasons. I have an intimate knowledge of this particular market. However, it is one of the best markets across Canada to invest right now. Saskatchewan is one of the most affordable places to invest. The city that I'm in is Regina, Saskatchewan, and in Regina, our average sale price right now is about $325,000. So for $325,000, you can get a basic starter home. Your 1,000 square foot bungalow with 3 or 4 bedrooms and a couple bathrooms. This is a single family detached home with a yard. So it's very affordable. We have a lot of positive economic factors here. We have low unemployment rates. We have some large capital projects coming to the city and around the city right now. So being very knowledgeable of the market allows me to, with a reasonable amount, I can reasonably say that our market will be strong for the foreseeable future.
Do you get opportunities to buy below value market properties?
From time to time, there are properties that come to us because we have bought properties in the past, and so we have a little bit of a reputation as somebody that can close, especially on difficult properties. There are times where we have properties that come to us that we can get below market. Right now, our market is very strong. There's multiple bids on most properties that are in good shape. So that's certainly a difficulty, is getting good properties below market. However, we are able to do that from time to time.
Interesting. How do you currently manage your onboarding, the engine room as such? And physically, what's your onboarding process, your qualification, your property sourcing, outgoing support? How do you manage all that? Do you have a system for that?
Yeah. Are you talking onboarding primarily for clients?
Yeah, I mean, I'm talking about, obviously I come to you, I'm a renter, you've got to do due diligence, obviously there's a lot of paperwork to be filled in. How do you go about it all? Is it systemized? Is it manual?
Yeah, it's fairly systemized. I do have staff, so we have a team that really helps people throughout the entire process from pre-qualification, initial contact, We have a mortgage broker on our team, so we would have a brief call. It's basically a 20-minute call with the mortgage broker where we go over their situation, and from that, we're able to develop that personalized plan. If they like that plan, we move them to the next steps where we do contract review. We then send them to our realtor to find the right house. All along the way, these steps are supported by our systems and by our staff. We use Monday.com is our CRM and our workflow. So that's the main way in which we manage our processes. Especially, we've had over 800 applicants in our city alone. So managing that is certainly not a small task.
So, I mean, if you were able to double that, would the system break? Or can you accommodate, doing even better?
Yeah, there's certainly always room for improvement on any system. We're implementing some AI components at present, and yeah, I think there's certainly room to scale. Um, I guess we'll see how rapidly we can scale, though. I think that's the thing, is doing it at an appropriate pace. Um, to yeah, doing it at an appropriate pace for the system and for the staffing levels we have and that we foresee in the future.
Well, one question I've got that just springs to mind. Mr. and Mrs. Smith come to you and say, look, we want to buy a house. You say, okay, go and find one. They find a house they love. You've now, you're going to get some investors on board, but you're also going to go and raise a mortgage on it with, the mortgage company that, you get on well with. Obviously, it's a rental type mortgage. How interested are the mortgage company in your new tenants? And do they do any checks on the new tenants, or are they only worried about you?
The institution that I use certainly has an interest in my clients. Yeah. When we enter into the rent zone, when my company, when Katie Properties is buying it, we provide the lease to them. They don't look too much further into it up front. But I mean, as a financial institution, who would you rather be dealing with? Somebody who maybe is just moved out of mom and dad's basement, has a first job, is really just kind of starting things out in life, or somebody who has now just done a 3-year rent own where they have a proven track record of making their payments on time in full. They've received educational services throughout to teach them things like financial literacy and credit counseling. They've saved their full down payment and they're now mortgage ready. We've had that conversation in depth with the financial institution I work with, and I would argue that my clients coming out of the end of the rent home are better prospective clients for them than half the people off the street at times.
Yeah, the process actually you run sets them up as an ideal candidate for that institution.
Absolutely.
But where do most of your clients come from today? I know you mentioned a couple of categories, but where do your clients actually come from overall?
Yeah, most of our clients are coming through our ads. I mean, we have marketing and outreach. We have outreach in rental sections, so people that are renting will see us when they're maybe just looking for another rental, but then they come across a rent own and they think, well, maybe this is something I would like to do. I'd like to obtain home ownership at some point in my life, so maybe this is the nudge in the direction I needed. We also have marketing in the for sale sections as well for houses, so that again, people that are looking for houses might come across us and maybe they're not entirely ready. They're just window shopping. But again, this might be the nudge in the right direction for them to take a step to improve their life. A lot of word of mouth as well. From past clients that have successfully become homeowners, they're referring their family and friends as well.
Do you find market visibility, for you is good? Is there any challenges that you face, like awareness, education, or trust out there in the market that you're not getting through enough, or how do you get the message out?
Yeah, certainly. I would say I would say that I'm not reaching um, a massive percentage of the audience that could use our services. Even locally, if I was to put a number to it, I'd say we're probably reaching somewhere around 15% of people that could utilize our services. And yeah, we're looking to improve that as well with our marketing strategies. Yeah, visibility is we're improving our visibility by doing things like this, and more social media, more ads and things like that. And then you mentioned trust. Again, Rentone does have a bit of a stigma behind it, so that's something that we have to handle right away. So, we do have our website that gives a lot of great information for people that are interested and hopefully shows them why we're doing Rentone and how we're doing Rentone and why it could be a good fit for them. Um, so hopefully that develops, a level of trust where they're understanding what it is we're looking to do. Because again, truly, their success is our success. So we want to find people that have a strong desire for home ownership and want to complete our program.
Looking ahead 3 to 5 years before we wrap up, where do you see the rent to own market going? Do you see it becoming more widespread, more institutional, more systemised? How do you see it in 5 years' time, for example?
I certainly see rent own increasing over the next 3 to 5 years. Government is becoming more acceptable of this alternative strategy. The traditional means of buying a home where somebody has their full down payment saved up and they go to a realtor, it's there's a large segment of the population that just aren't able to do that right now, and it's a growing segment of the population. Housing prices are not going down; they continue to increase. So saving a down payment is you have to save more and more and more. In Canada, there's what they call the stress test. So they have minimum interest rates that anybody that wants a mortgage has to qualify at, and they're quite high. And it's to protect the lenders, which is a good thing, and it's to protect the consumer as well. But it makes it more difficult for people to qualify, or they qualify at a lower amount, a lower mortgage amount than what they're interested in, and even what their payments might support. So there's a growing segment of the population that could certainly use an alternative like Rentone. Um, and I already mentioned governments are becoming more accepting of these alternatives, and I've had many conversations with my local municipality, um, and there's talks of adding it to some of the legislation or some of the municipal guidelines to make sure that it's being done appropriately and that it's truly helping everybody that's involved.
Okay, just before we close up, I just wondered if you could fix one thing overnight about your market, whether it be capital deal flow systems or market awareness. What would it be?
Yeah, if I were to fix one thing, it would certainly be the capital flow. Um, we work with great investors, and we provide excellent returns in what I would consider to be an incredibly safe investment vehicle. Uh, but it is capital intensive. Every project requires purchasing of a house, so that's certainly the area that I would like to improve most.
For listeners trying to get on the property ladder, what should they understand about the rent to own scheme?
Great question. So are we talking people that want to facilitate rent owns or
Yeah,
people?
well, no, people that actually, potential customers, what do they need to understand before they start looking at this option?
Yeah, our clients, if they want to be a client, they have to have a strong desire to actually own a home. This is not just a place to rent for a period of time and then walk away. They have to want to improve their life and be ready to take action towards that. Um, you know, Again, they have to make those improvements to their savings, to their credit in order to qualify at the end. So, um, yeah, and I guess the other thing that I would say is reach out. there's a lot of people that might think to themselves, there's no way that I'll qualify, or they won't take me as a client, and it's not necessarily the case. We like there's not necessarily a minimum credit score for people. We've helped many people that have felt that they weren't going to be looked at, and they're very surprised when we say, yeah, we'd be happy to work with you. So just reach out.
And for operators, who want to get in this market, not that you might want them to get in this market, where's the real opportunity for this model if it's built properly?
The opportunities, if this model is done properly, it is a what I consider to be a safer, more secure model than just renting or owning rental properties, for many reasons. So for other operators that want to get into this, do your homework and understand how to operate an ethical rent to own operation. You have to understand your market. You have to understand people very well. You have to understand how to move them from their current situation to a qualifiable situation. Otherwise, you're not going to find success.
One question I've got left to ask. Do you carry a lot of inventory? Do you get stuck with a lot of inventory? Or do you try and be cash rich?
Yeah, we don't carry much inventory in the rent-own program specifically. As I mentioned to you, we have a multifamily portfolio and things like that. So that's different inventory. But rent-own specific, like I said, we're doing tenant buyer first, where they pick the house of their choosing. So they have a vested interest financially and emotionally. They pick the house. They don't typically leave. We have a pretty high success rate for people converting to homeowners. So our inventory is occupied while they're living in it, and then at the end they buy it. So there's very little inventory that is not a cash flowing, and it also has that stipulated price for when they're going to buy it at the end.
Thanks, Carl. I think this was a good podcast. I mean, this was not just obviously a property conversation. It's a genuinely important solution to a growing global problem. I mean, people in the UK are finding it harder and harder to get mortgages. I think it's a common problem. In Europe, I think it's even more difficult. I think it's easier in the US, but certainly in the UK and more so in Europe, it's a very big issue. For people that actually want to know more, especially for locals, if they're listening in, or anybody in Canada, where can they find out about this in more detail? Where can they find you, Carl? Where can they go to?
Yeah, absolutely. They can find us on our socials. We're on Facebook, Instagram, LinkedIn, YouTube, and our website, kdproperties.ca. The best way to find information would be to visit our website. There's a lot of great information. Our contact information is on the website, and they can call me directly at any time.
All right, Carl. Thanks very much for the podcast. Thanks for being my guest. It's been a pleasure. For the listeners listening in, thank you for watching Wise Tech for Wise Money again. I'm Gary Wayne, founder of A1 Solutions. We'll be back within a couple of days with another topic. Thank you once again, and see you all next time. Thanks, Carl.
Thank you, Gary. It's been a pleasure.